Hello, traders. It's Friday, September 8th. We're about an hour before the open. Let's take a look at our last picks, see how they did, do some market analysis, and then let's find a couple of new picks. That's how my videos work. I want to prove to you that this systematic trading approach works. CAT. This was a bullish pick that I highlighted Monday afternoon. Market was closed due to a holiday. You can see how the market has actually been down so far this week. Now, the caveat to getting long CAT was that we wanted to see the market bounce off of this 50-day moving average, which, by the way, in the background, this is the S&P 500, SPY to be exact, on a daily basis. This 50-day moving average, very, very significant price level, horizontal resistance, now support, was breached. So we needed to test it and stay above it. We didn't do that. We kept leaking lower this week. Now the volume's been pretty light. This is what I call a holiday hangover. You got a 3-day weekend. Everybody comes back Tuesday and Wednesday. There's no real news to drive the market. So you get a lot of choppy price action. But there has been a negative bias to it. We did not bounce off of the 50-day moving average. We broke below it. So this is looking more and more like a bearish flag formation. There's your pole, there's your upward sloping trend line. Now we're starting to break back below it. If we continue to leak oil and we take out this 440, 44.25 level on S&P 500, then I believe we're going to test the 100-day moving average. We'll put up SPY. Everyone has that on their chart, so it's an easier reference point for us. In any event, the fact of the matter is that the market has been drifting lower. Yesterday, we had a nice sell-off and a little bit of a bounce, but in general this week, soft price action. You can see Caterpillar's actually held up very, very nicely, relatively strong. Orange line above zero. I still like Caterpillar. It's just we don't want to be doing a lot of long positions right now when we've got the market drifting lower and breaking that key support level. So let's take a look at the bearish pick, wing. And again, the caveat here was that we wanted to see a breakdown before we would take a short position. Well, we got that breakdown right after the next day, the next morning. So let's take a look at a 15-minute chart. You can see that sell-off. So video comes out here, big sell-off. But to be quite honest with you, I wouldn't have traded that Tuesday. I mean, this is a really nice drop, and I started to get excited that, hey, you know what? This stock looks like it's going to be a really nice short for us. But we still didn't have that crackdown below that 50-day moving average for the market. So there would have been no reason to take that trade. As soon as things start looking good, look at this price action out of nowhere. Well, that's kind of weird. Where'd that come from? Everything looked so good. So let's talk about that briefly. Let's zoom way out, and I'll show you why I like that. Breach of this upward sloping trend line on a daily basis. So this is a very long-term trend line, and you can see how that support was challenged, but the stock did find support there. Well, that's how these trend lines work. When you crack them, you want to crack them on heavy volume. You want the stock to close on its low of the day, and then you want to see immediate follow through. Now, we did have multiple breakdowns here, a compression with multiple breakdowns. We're below all the major moving averages. We've got another downward sloping trend line here. So we have all of the characteristics that we look for in a stock. So why the heck did we see this type of strength? I can't tell you exactly why, but I do have my suspicions. Wing sales are really big during football season. And last night, football kicked off with the Detroit Lions and the Kansas City Chiefs playing. And when football season starts, people love to buy wings. Buffalo Wild Wings, when it was a publicly traded stock, you'd see the same type of price action. There are a couple of other plays that I think responded well to football season kicking off. This is DKNG. You can see Stock really was not doing a whole lot of anything earlier in the week. It pulled back a bit, and then all of a sudden, the last 2 days, it starts to find strength when? When the market is going down. There's no other explanation for the stock to be moving higher apart from NFL season has started. Let's take a look at Fubo. That is a TV provider. Big sell off earlier and now a big rally up. You can see that this stock has been strong on a daily basis. My point is that sometimes there are events that you don't even really associate with the underlying stock that can impact it. So Wing, I believe, still looks weak to me. So if we can stay below this level and if we can crack back below these support lines here, and let's get back into a view that we can really take a closer look at. This 157.50 level is the halfway point of this long green candle from yesterday. I would like to see the stock quickly recapture that 157.50 and start eating into this long green candle. If that happens, then I think there's a good chance for the stock to continue to drop. The food sector has been very, very weak. And I'd mentioned that earlier. Stocks like Hershey's, Conagra, Hormel. I mean, look at these charts. You can see restaurants are definitely going to be impacted by higher food costs, lower profit margins, higher wages that they have to pay out. I think Wing is also going to be vulnerable to that. So I still like the short. So let's move on to a little market analysis. Let's find a couple picks. I want to get this video out as soon as possible. So what's my take on the market action right now? Well, this bounce right here should have been able to come down, challenge the 50-day moving average, and find support at that 445 level. It really didn't. It broke back below it, and this morning we've got the S&P futures down about 10 points or so, but the price action on a 5-minute basis is just awful. We get this gap and go down that looks like it's starting to gain some momentum. This is the price action from Wednesday, and then we get this nice, pretty big bounce in the afternoon. Lots of mixed overlapping candles, not, you know, decent volume on the way down and on the bounce. So you can see volume was fairly elevated. This tells us that buyers and sellers are engaged. Here, we've got just a mishmash of green and red candles, and the market sells off, but it finds support, and then it almost closes this gap, but not quite. We're still in that holiday kind of trading mode right now to where we don't know, is the market going to take off? Is it going to make another higher low here? Is it going to preserve this upward sloping trend line and then continue toward the all-time high? Or was this breach significant? Are we finally going to see that selling today that continues to gain traction and drifts down to this upward sloping trend line? If this trend line is breached, I believe that the 100-day moving average is a no-brainer. It's going to be challenged because buyers are going to be very, very passive if they see this bounce fail. So they will be operating under the notion that they will be able to buy at a lower price. So they'll be very, very passive. And profit takers or short sellers will get more aggressive as they see this support level tested and failed. So we're going to find some trades on both sides. There's not a lot of news right now that's taking place. The calendar next week looks pretty good. We've got CPI and PPI, although both numbers have not generated the big market reactions that we've seen in the past. We do have an ECB rate decision next Thursday. Pretty hawkish comments coming out of Europe. And Europe's GDP came in at a dismal 0.5% growth rate for Q2. There's not a lot of growth happening in Europe. The concern there is that they could be heading into a recession and they're still hawkish and inflation is still high. Stagflation is a word that I'm seeing mentioned a lot. China's struggling. Their numbers have not been particularly good either. In fact, the PBOC, when the rest of the world has been raising rates, the PBOC has been lowering rates in China in hopes of stimulating economic growth. And China is finally stepping up to the plate and bailing out or helping out some of these stressed property developers. So there's some credit concerns in China as well. Very big unemployment rate, about 22% for youth ages 16 to 25. That is tough. Slowing economic conditions in China. Well, where's the growth going to come from? Now, those are fundamental questions that we can ask. I do believe that as September unfolds, if the Fed maintains its hawkish stance, you're going to see some nervous jitters, particularly if economic data points start coming in weak. So far, they've held up quite well. Jobs have held up well. I think the danger is if we start seeing some economic weakness, everyone's going to start worrying, has the Fed gone too far? Are they going to push us into a recession? And if they do, will future rate cuts stimulate economic growth? Will it help to reverse that trend? Well, we don't know that answer, but I think that we start getting some really weak economic data points. I think that we could see some selling pressure in the market. It's September, seasonally weak month. So I think that we are more likely to come down and test the 100-day moving average than we are to take out the 52-week high. And this is a lower high double top. So right now we're still kind of in a waiting period. We got a week or so with some big economic releases next week. And then in a week and a half, we get the FOMC rate decision. So that is also big news. So until we get something that traders can truly latch onto, I think we're going to continue to see this mixed overlapping candle. One day you're up, one day you're down. Generally just a little bit of a negative bias to it, but nothing that you can sink your teeth into to swing trade. So on a day-to-day basis, you're really having to look for those stocks with big technical breakdowns on heavy volume to short. And on the long side, you're looking for those stocks that are breaking out to the upside with good relative strength and heavy volume. And there are some pretty decent day trading opportunities. So keep it very short term and wait for that news and wait for that breakout or breakdown to give us some sense of direction because we need that follow through for swing trading. It doesn't do us any good to have a big up day like this followed by selling like that. And it also doesn't do us any good to start getting short in here after we finally start to see, oh, there's a 50-day moving average is breached. So it's time to short. Well, the market gaps down and then it closes almost on its high of the day. Well, that's no good for swing trading either. We don't want this. We want nice, steady, directional movement for swing trades. Nice, strong trends. We don't have one right now. So I wish I could give you some great swing trades for maybe a 3 or 4 week play, but we're just not in that environment right now. As traders start to come back, you're going to see the volume pick up. We're going to be back to normal. We've made it through the summer doldrums, and we should be back to normal probably by midweek next week. So let's find a long, let's find a short. I'm going to go into my heavy buying list, and we're going to click through some of these candidates. We'll go back into our main chart, and I'm just going to flip through them, and I'm looking for these nice breakouts. This is BNB going to be added to the S&P 500. Breakout above the 50-day moving average. Not too bad. It's holding those gains, but not anything I'm particularly interested in. Not seeing any strength there. BX. This is actually kind of a nice breakout here. Decent volume. You can see how it's broken through this horizontal resistance. And yesterday we had a nice bullish engulfing candle here. So this tells me that the stock is likely to go higher. I don't like this big dip. That tells me that the stock is pretty volatile. So yes, it looks like it's going to break out. It's going to go higher. I'll be watching it for a possible day trade. INTC, I do like this long. You can see we've got a nice horizontal breakout right here. We've also got a high minus trend line that's been breached. You can see the stock is above all the major moving averages right in here. So let's zoom out. Nice relative strength too. Look at that volume. I love that. I love that relative strength. I love that volume. I love a breakout through technical resistance. So let's keep zooming out. That is a very meaningful trend line, and we're breaking out above it. So yes, I like this. I like Intel. I think it's got to get through this price point right here, which is getting through right now. Sorry, I had scrolled back on the chart, but you can see how we're breaking out through it. That is a very significant breakout on heavy volume, great relative strength, above all the major moving averages. Nice base has formed. We've got higher lows, and now we're starting to make higher highs. I really like Intel. But there's a caveat to Intel. Yeah, you can day trade it when you've got market strength. But if you're going to swing trade Intel, you have to wait for the market to get back above that 50-day moving average. If it does, Intel is going to continue to move higher. So I love that for a long pick. And let's take a look. Let's go into heavy selling and see what we can find there on the short side. And Qualcomm's at the top of the list. We're still zoomed out, which is good. We can see what the overall price action is. You can see this is just such a choppy stock. It is up and down. This is a nice breakdown here. So yesterday we traded that in the chat room. Really nice. Would I swing trade it? Yeah, it's so herky jerky that it would be very difficult to take a longer term position on that. STX, we're just going to continue to go down. Apple, we've got a little breakdown on Apple right in here. That's a major trend line that it bounced off of. Zoom out and see where that trend line comes into play. Yep, that's a valid trend line. We're bouncing off of it right now. So we're going to continue to watch that and watch for that breakdown right in there. So I'm going to just kind of move down. I know there's a stock that I'm interested in highlighting, and it's MOS. This looks like a really good short to me. There's a couple things that I like about the stock. One is that when it sets a direction, it tends to have follow through. So you get this nice big sell off, it compresses, it tries to drift a little bit higher, but sellers return. See you later. This is a nice bounce. Once it starts higher, compresses, and now it continues higher. We've got the stock rolling over. It's below all the major moving averages, 200, 100, 50-day, breaking this upward sloping trend line. This is a low plus trend line breach right there. You can see that is a convincing breakdown on heavy volume relative weakness. Yeah, well, Pete, what about this? This is a low minus trend line. It looks like it's finding support there. Yes, it is. These downward sloping trend lines that connect the lows we refer to as low minus trend lines. These are not as significant as your low plus trend lines. So yes, we do take a look at them. These have a tendency to fail more often, but yeah, we want to see this crack down. I should probably clarify that. What do you mean, Pete? These tend to fail more often. What I mean by that is that the stock is already in a pretty heavy sell off because you're connecting lows. And when you're breaking down below those lows, this trend line is actually following the stock. So it'll continue to go down and go down. It'll be harder and harder for the stock to break it versus a low plus trend line where you're connecting the lows. When you get these breakdowns, this is a trend reversal. These tend to have much greater follow through because the price has been moving higher and higher. That means the stock has a lot more room to fall on the downside. And when these trend lines are breached, tend to get that follow through, where these oftentimes, when they're breached, because the stock has already been in a downtrend, sometimes they can signify a selling climax. So you get that breakdown and then a long candle back up through it. So it's significant. I don't want to downplay the significance of that trend line because they are important. But I want to see it crack down below it. I want to see that relative weakness continue, and I want to see that heavy volume. So MOS is your short pick. I still am going to try and do a video Sunday night. I'm trying to get back on track with vacation time and with the long holiday. I'm a little out of sync. My ideal setup is to do a recording Wednesday before the open and then Sunday evening. That way I've got nice spacing between the videos and there's a chance for the underlying to move. I've highlighted a bunch of longs and shorts that I still think are valid. So in the previous videos, please go back and watch those. We just need the market to get out of this type of trading pattern where we're just up and down, chopping around. Thanks so much for watching, everyone. Good luck with your trading, and we will see you Sunday night.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.